So I think the biggest question on everyone's mind is the simplest one of all. What's next for Tesla stock? Now, I'm not a fortune teller. I don't have a crystal ball. We do tend to be right more than we are wrong here on this channel. I want to let you guys know what I think is coming next for Tesla. Obviously, come to your own conclusions, but I think it's pretty clear. It's been a long time since it's been this clear what's coming next. I want to share that with you here in this video. I also want to go over some confirmation of this market that Fed Jerome Powell gave us today that you need to know. I'm not going to let this go under your radar. You're going to know if you watch this video. So we're going to get into all of that. We're going to listen to Dan Ives as well, his full opinion on this Cybertruck delivery event and what the Cybertruck means for Tesla stock over the next coming weeks, months, and years as well here in this video. We have a lot to get into, so let's get started. Okay, so first things first, I want to be pretty dang clear. If this were a negative event for Tesla stock, Tesla would be down 5 to 10% right now. It's not. The Cybertruck delivery event was as successful as anyone could have hoped on the bull side. This was a home run, a grand slam, went off without a hitch. The vehicle is impressive. The pricing is compelling, very competitive, but much higher than even some of your bulls were expecting. The lowest end variant of the Cybertruck is priced $11,000 higher than what Dan Ives expected, or what other investors, hedge funds, and institutions like a Gary Black or a Gene Munster expected for Cybertruck pricing. As I said before this Cybertruck delivery event, the pricing was the biggest catalyst for Tesla. Let me tell you this. If the lowest end variant of the Cybertruck was priced at $50,000, Tesla stock would probably be down in the neighborhood of 3% or so today. Because the margins can't look good on that. At $61,000, margins probably look okay. And at the highest end variants, well, those even came in higher than expectations. A lot of people were expecting around $80,000 for the tri-motor. Instead, the tri-motor came in about $20,000 higher than that, just under $100,000. And as you know, the tri-motor is going to be the first one that is produced. The dual motor is going to be the second, and then the lowest price variant, as any ramping stage does, right? You start with the highest priced vehicle, and then you work your way down to the lowest price vehicle. So these Cybertrucks are going to bring in quite a bit for Tesla. There's a lot of questions on what the margins are going to be. I'm sure the margins are pretty okay for the highest end variant of the Cybertruck. This is really going to boost that top line and should boost the average selling price, the ASP, for the Tesla lineup, which should help out earnings, even though some people don't expect they will. Now, what is actually happening to Tesla stock today? Why is Tesla not ripping higher? Well, it's pretty simple. And I said there was a chance of this. Although I expected Tesla would be green today, you're down about 0.5%. So it's really like a neutral day for Tesla. In Tesla terms, 0.5% up or down is pretty dang neutral. I expected a larger rally, because I expected the lowest end variant at $60,000, the medium variant around $75,000 to $80,000, the highest end variant around $100,000, which was spot on the pricing. So we were right there, but we're wrong with the actual reaction from Tesla stock. We said there was a possibility this would happen. The buy the rumor, sell the news saying, it happens all the time for many different companies. NVIDIA, look at NVIDIA's last event. It was spectacular. They announced new products, and look at NVIDIA's earnings lately. But NVIDIA still sold off huge after their event, way more than Tesla is today. That's the buy the rumor, sell the news. It's a pretty simple trading strategy that a lot of people do follow. That is what is affecting Tesla stock today. But the buy the rumor, sell the news, it doesn't last that long if the event is truly positive and there's no negatives to pull out of it, which to a definition is the Cybertruck delivery event was yesterday. There was literally nothing you could say negative about the event. down to the pricing, down to the specs of the vehicle. The only thing some people are saying is the range is a little disappointing, but what did we really expect from a bulletproof truck that is stainless steel? Like, what did people expect? I don't think that fundamentally changes anything for the Cybertruck, so I don't think that's a big deal. But long story short, the buy the rumor, sell the news doesn't last long. I expect over this weekend, heading into next week, you're fully going to be over the sell the rumor part of this delivery event. And that's where things can get a lot more interesting to the upside. There's some context you need to know, though, because Tesla is not the only stock in the markets, and Tesla reacts to other things that are non-Tesla specific. Like Fed Jerome Powell today. He basically confirmed this market rally. He had a chance today, with some of the questions he was asked, to crush the markets, to really set everyone's expectations straight. Instead, he gave a little bit to the bears and a lot to the bulls. This was as close to a victory lap that you could have gotten from Fed Jerome Powell today. He was asked, as he normally is, "What do you do for fun?" Fed Chair Powell. He normally says, goes to concerts, plays guitar, likes music, things of that nature. He said, a low CPI report. Literally joking. Now, this is very important right now, specifically, this tone from Powell, because the markets are expecting 5 rate cuts by the end of 2024. You're expecting Fed funds rates will be in between 3.75% and 4% by the end of 2024. That means stocks are now a lot more attractive. But take a look at this. For March 20th, 2024, the probability is now 58.6% for your first rate cut, a 32.8% chance of a continued pause. So March, we're expecting the first rate cut. That is right around the corner. Markets are forward-looking. So long before you ever get your first rate cut, as long as the economy is not heading into a recession and the economic data is starting to really look downwards, you're going to get money going into areas of the markets that will benefit from rates going lower. This is not rocket science, okay? Tesla will benefit dramatically from rates going lower. On the margin side, right, via Tesla being able to potentially charge more money, being able to raise prices across the board and keep the same monthly payment, that's all to Tesla's benefit. Tesla could pass on the savings to customers, but you'll probably get a mix. Tesla will probably raise prices and make prices lower for financing vehicles. Your monthly payment, that is. So there's a win-win to everything involved, or everyone involved. The consumer themselves will be better able to afford a Tesla. These things are or will start to get priced in to Tesla stock and to other stocks here over the next coming weeks. I would imagine by January, by midpoint January, the markets are going to fully be pricing in the rate cut that we're expecting for March. So before you even get to March, before you even get to February, capital is going to be aggressively moving around into stocks that will benefit from rates going lower. You actually seen that to a certain degree happen today with small and mid-cap companies. The Russell 2000 was up 2.6% today. The NASDAQ was up 0.5%. That means the Russell outperformed the NASDAQ 5-1 today. So there was a lot of money going into interest rate sensitive companies, companies that benefit from rates going lower. I think Tesla would have been up a lot more today if we didn't have the Cybertruck delivery event. Again, not because the delivery event or anything about it was negative, simply because it's the buy the rumors, sell the news event, right? It's pretty simple. If you've been in the markets for a while, you've heard buy the rumors, sell the news many times before. Now, Tesla stock today had some very bullish option activity. You had 874 orders from hedge funds and institutions worth $1.6 billion, with a positive order value of 65%. If you take a look at the total open interest for Tesla options across the entire option chain, there is 7.69 million options on the Tesla option chain. Today, you had 3.03 million for options volume. Almost half of the amount of total options held on the option chain. That is a lot of options, both on the call and the put side. Total call volume of 1.62 million. Total put volume of 1.4 million. What I like to look for in this activity is the ask or above, because that means people are willing to spend more than what the contracts might actually be worth to get into positions. So out of 1.63 million calls purchased today, 757,000 contracts were bought at the ask or above. On the put side, 634,000 puts were bought at the ask or above. On a day like today, theoretically, where Tesla stock is down about 0.5%, you would think after this event, the logical narrative would be Tesla's probably going to continue to fall from here. That's the rookie mental, analysis of Tesla stock today. Tesla's going to fall. I should go out and get into those puts, no matter if I have to pay a little bit extra. You're actually not seeing as much of that as you would expect to otherwise see on any other normal day or normal event. Now, on a technical basis, Tesla stock is above the 50-day moving average, under the 100-day moving average. You found resistance at 240 today. Currently, you're at $238.20 per share. So you're at a pretty comfortable level. The stock is overall bullish. Now, I think the rally continues, likely into next week. But we do have some important data. We do have some different things that are going to be happening as well coming next week, including the Fed on December 13th. These are all going to be big catalysts. There's even a 1.6% chance of a rate cut coming in December. That's obviously not going to happen. But it's pretty funny that we're actually pricing that in to a very small degree. What I actually think you are experiencing or about to experience over the next coming months is the great shift of capital. I haven't heard anyone talk about this the way that I talk about this, so I've called it the great shift of capital. That's just the name that I've dubbed for it. Call it whatever you like, but it's essentially massive amounts of capital that have been sitting on the sidelines for 2 years, for a year, for months, that has not been in our markets, that comes back into our markets. As rates go lower, it looks a lot more attractive to buy stocks than to invest your money in bonds. If Fed funds rates next year by December are 3.75%, that's going to put your 10-year Treasury yield somewhere in the neighborhood of 3% to 3.25%, if I were to imagine. You could be back into the twos by then. The high twos, that is. That's not that attractive, considering inflation's probably going to be right around 2%, if not a little above 2%, a majority of years. So, including inflation, you're probably breaking even by next year, the end of next year, on those bonds. At the very least, at some point in 2025. But as rates go lower, that is no longer this big drag on stocks that it has been over the past couple of years. Now, it's hard to know exactly how much money is sitting on the sidelines. There's a couple different things you can look at. I like to look at money market funds as one specifically. You are at $5.9 trillion. Now, I could make the argument that we've been in a recession for a while now, just a rolling recession in different areas of the economy. Now, why that's important is because money in money market funds typically peaks out about midpoint in a recession. So when you get that peak, you can normally see a drawback of 40 to 45% in the total amount of money in money market funds. That would mean if that happened today, you could see $2.5 to $3 trillion head back into stocks. Just for a little fun fact knowledge here, the total market cap of the Russell 2000 is $2.23 trillion. How much money do you think it's going to take going into the Russell to double the Russell or to double the average stock in the Russell, your interest rate sensitive companies? Probably around $300 billion. That would be my estimate. $400 billion. You probably get a double up in your average stock in the Russell. And that's why you've seen the Russell really outperform today. I think this is a trend that is very slow that's going to continue for a while. Now, I think Tesla has a lot of catching up to do, considering today the Russell was up so much and Tesla was down artificially due to the Cybertruck delivery event, due to this buy the rumor, sell the news situation. You're going to see a catch up in Tesla, in my personal opinion, where Tesla might really start to outperform. Because if you're a hedge fund or institution, a lot of them cannot invest in some of these bad companies or low quality companies. Some of them have to follow some of your ratings, right? Like Moody's or S&P or Fitch that rate stocks as investment quality or investment grade. A lot of hedge funds and institutions are mandated they can only invest in investment grade quality stocks. Not all of them, but some of them. So that opens the door up a little bit more for a Tesla. That's why your big cap stocks today did not do as well as your small and mid cap stocks because they don't benefit from rates going lower. You could make the argument they're actually hurt fundamentally by rates going lower. Now, again, I want to stress, this is not a 1 day, 1 week, or 1 month thing. I think you're going to see this great shift of capital into the second half of 2024. Obviously, the biggest thing you want to watch right now is whether or not we are heading into a recession. If a recession becomes the most likely outcome, that's a problem. I will tell you as well, the thing that I'm watching that makes me a little uneasy as I'm making this video is gold. Now, gold is now at higher levels than even the banking crisis in 2023. Gold is very much seen as a safe haven asset. So that makes no sense. Why 10-year treasury yields are falling, small mid-cap stocks are ripping, and gold is ripping today. I can't make that make too much sense. It's hard to justify. So if big money is buying gold for some reason we don't know about, that could be a problem. Black swan events are called black swan events because nobody sees them coming. Besides a lot of your big money investors, right? Some of your big money investors might see something coming before we do. This is something we want to watch very carefully because ultimately, the only thing I'm concerned about at all for Tesla, it's not Tesla hitting their numbers or not. It's not Tesla cutting prices again at this point. It's not Tesla's margins getting worse. The only thing I care about with Tesla right now for a continued upside move is whether or not we go into a recession or a recession narrative becomes the most likely consensus on Wall Street. But even then, I think Tesla's already priced pretty conservatively. Estimates for EPS for 2024 have fallen over 40% within the last couple of months. That's not exactly a stock that is priced for perfection. That's a stock, in my opinion, that is underpriced, that probably beats estimates by a large degree and could be trading cheaper today than what Wall Street thinks or expects. And that's what I think. I think Tesla today is the cheapest Tesla you have been able to buy. Figuratively speaking, right? The car is the cheapest it's ever been too. But I think the stock is the cheapest it's ever been. By a long shot. Ever. Now, in terms of what I actually expect from Tesla, I don't think it's been this clear in a very long time. Tesla stock is going higher from here. That's a fact in my personal opinion. That's not a question. That's not an argument. That's a definitive fact as long as we avoid a recession and the recession narrative does not come about. Stocks can crash based on recession fears faster than they will in actual recession, right? Markets will crash long before recession is declared just based on recession fears. That's the biggest thing to be watching. But minus that, which is my base case, I'm not expecting that, at least right now. I think a recession could be a more 2025 thing, since if you head into a recession during an election year, yeah, that's a big problem if you're trying to get reelected. I think there's a greater chance that we see 10 rate cuts next year than a recession. My personal opinion. With that being said, I think it's a definitive that Tesla stock is going higher from here. Now, for those of you guys that trade options like I do, this is not a time for options. There's no rhyme or reason why Tesla is going to go to here by a certain date, meaning that Tesla's not guaranteed to go to 300 by next week or next month. I do think that's probably going to happen. By the end of 2023, Tesla's going to be around $300 per share, slightly under, slightly above. You might retest or retake the 2022 highs around $315 for Tesla by the end of this year. So, in all reality, I'm really saying that Tesla stock could rally about 32% by the end of this year. If not, just to get to 300, that would be a rally of about 25.5%, 26%. Is that a guarantee? Obviously not. I'm not a financial advisor, guys. Just using my common 2 cents, my investing knowledge over the course of the last 8 years now, seems pretty clear to me. The clearest it's ever been for Tesla. There's a massive catalyst, that is rates going lower. Estimates have fallen so much. Tesla, when rates fall, can raise prices, beating the estimates, making the stock much cheaper today than it looks like. Tesla might not be trading at a 65 times multiple for next year. Tesla might be trading at a 30 times multiple for next year if the earnings come in the way I think they will. That's a big difference in valuation. That means that that spread, you probably get to capture that in profit sometime from now to some point in 2024. So that's my expectation. Now to the upside, 240 is an important level. Above that, 255. If you get above 255, then you can start to really break out from there. So once you get above 255 and close above there, call it 260 just for a round number. 260 sounds a little bit better. You're going to break above this long-term downtrending line of resistance. That's where you can get a lot more capital flowing into the stock. That's where the chart goes from looking neutral bullish to outright bullish. Right now, I mean, you're in this downtrending wedge. You connect both lines. You're uptrending from the lows. It looks bullish, but overall neutral. You're not in a full-on breakout right now. You're not in a full-on crash. You're pretty neutral with an upside bias. Above 255, 260, you turn into full risk on, and you go full bull at that point.
Talk about the Cybertruck and bring in our leadoff panel on set. Here we got Wedbush Securities Managing Director, longtime Tesla bull, Dan Ives, a Deepwater Asset Management Managing Partner, Gene Munster. Dan, big deal. We've been waiting for years, right? And as Tom Petty said, the waiting is the hardest part. It's here now. But how many of these can they actually deliver?
Look, it's 4 years in the making. I view it as a historical moment for Musk and Tesla in terms of the Cybertruck launch. I think the big thing is really when it gets to scale. 2025, 2 to 250,000 units per year. Look, you look at reservations right now. You have call it 2 million. Let's say conversion we think could be about 40%. This does move the needle. Now, producing...
Well, that's only 800,000.
Now, producing, you probably next year, 40 to 50,000 in terms of what they could produce. But in my opinion, this does move the needle, and I think it's just another flex the muscle moment for Musk and Tesla.
Yeah, Gene, is it material to the company and to the stock, or is it primarily just a really cool marketing vehicle, for lack of a better term?
So I'm optimistic about Tesla, and I think I'm realistic that this is not going to move the needle for the next couple of years, and agree with Dan that this has big potential, but really this is going to be a sideshow. And I think Phil's setup was spot on as far as the market that this is going to address, that 20% of the market. And that kind of puts in the category of an S or X. That's 5% of their total deliveries. And so there's a massive opportunity here. Make no doubt about it. But they got to get that price down. And I think the prices that we saw today were 25% higher than I was expecting. That's a big deal. They're $10,000 more per vehicle for a comparable, if you want to call it comparable, F-150 Lightning. 10,000 is a lot of money. So this really isn't going to move the needle for the next couple of years. When they bring the price down and they start to, I think, go after the what I think will be a bigger part of the market, 26. Dan, you said 250,000 in 25. That was my number yesterday. Now that's my number for 26.
You know, if I'm looking at it, it's a unique vehicle, right? So obviously, I think people are going to love it or they're not. I'm looking at it as a suburban dad, thinking, where's the dog go? Where's the bicycle go? Where do the kids go? Well, the kids come third. Sure. You notice that. And I just wonder what that market really is, absent those 2 million reservations, which, to your own point, are not all going to convert.
Sure. I think, and Gene's talked about this as well, I think it's really about the halo effect. I think what's important here for Tesla, it's not just about the units, it's about them creating another category. And I think what you're seeing, even in Detroit with GM, Ford, really paring back a little of their EV strategy, Tesla is ultimately doubling down. And I think when you look at Cybertruck, they're going to create the category. I do think over time, as Gene talks about, prices do come down. But when, in terms of moving the needle, you start to add 250,000 units, 350,000 with some other models that come on. This does, in my opinion, it's the next phase of the Tesla growth story.
Sure, but I guess, Gene, what we don't know, and Dan or Gene, if we do know this, and I just don't know it, please correct me, do we know what it costs to make it? Are they going to be able to sell it profitably even for $99,999 or $61,000 or whichever version you get? Because if not, then we're just talking about a novelty item.
Well, at the current production level, no, they're going to be losing probably 40,000 on each vehicle.
40,000 on each vehicle, probably?
Yeah, at the current scale, I mean, it's once they start to get above 10,000, then that's going to start to drop. But right now, they're basically hand making these cars right now. But eventually, at next year, that's going to ramp. And I think that it is the next 2 years. It's a sideshow. But I want to emphasize, Dan said something that's really important. Is that I think that, I've been waiting for this for 4 years. I was disappointed today in the price. I have a reservation. I don't know if I'm going to get it. I think I'm probably going to wait a couple years for the price to come down to get it. So I was disappointed, but I think that disappointment kind of misses the bigger picture. And I just want to emphasize what Dan said, is that this is about a company that is embracing EVs 100%, just like BYD. And at the same time, you're seeing GM backing off. They're in a catch-22. And I think it's more about this company just continuing to build its brand as electrification. And I think that we're going to see these buyers of EVs return in the next 5 years. And the rest of big autos basically going to be off sides trying to catch up.
I think Gene nailed it, because essentially what's here, it's Tesla's world. Everyone else is paying rent from an EV perspective.
Yeah, I mean, I tweeted out and said on the show, Dan, I don't think people want EVs. They want Teslas, and they're different.
Exactly. And I think, Brian, the 313 area code, you're seeing them sort of take a step back. And I think what this is really Musk and Tesla really showing from a technology mind and market share lead, just how they're miles ahead of the competition.
So definitely some interesting takes. We heard from Gene Munster that is a little bit on the fence about the pricing with the Cybertruck. I think that's a pretty respectable price on the lowest end variant, considering Model Y is going for around 43, 45,000. You're paying about 15,000 more for the lowest price variant of the Cybertruck. I think that's pretty respectable. We'll have to wait and see. Time will tell. Let me know what you guys think down below in the comment section. That is the most important. Let me know what you think is next for Tesla stock as well. Hit the like button and subscribe to the channel on your way out of this video if you made it to the end of this video. Again, congratulations to the community members of the trading group that hit some fantastic trades overnight tonight. With UiPath, that was a 28% gain today on the stock, hundreds of percents with the options. Same thing with Marvel puts. Those did well also. So congratulations to you guys. Another great week in the bag. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.